Good afternoon, everyone. Am I clearly audible to all of you? Please raise the virtual hand. Okay. Thank you, Anshul. Thank you, Dheeraj. Let me share my screen. I hope the screen is visible to all of you, but it is blank. Voice is clearly audible. Okay. Yeah, please lower your hand. I have understood and you all have given a confirmation. We'll wait for 1 or 2 minutes. Let others also join. So we'll begin. In the meantime, I'll mention certain things, how the session will go, what are the roadmap during the course. I hope it is the first session for all of you. So I'll give you a brief about the session and how you can ask the questions and all through chat, right? So as you all are writing in chat box, same way you can keep on writing your questions during the session. I'll take the question maybe as soon as possible. If I'm conveying any of the thought or I'm explaining something, what you can do, you can meanwhile write your question in chat box. I'll try to finish it if it is related to topic. Otherwise, I'll take all the questions at end of the session if it is not related. This way we'll move. And the brief introduction about myself. My name is Shilpi Srivastava. Let me write down here. I'm a management professional and CFP, Certified Financial Planner, and investment banking trainer since last 3 years with DataTrain. Prior to that, I have more than 11 years of work experience in the same industry with different profiles, banking, equity, wealth management. So different form of finances, but yes, it is in the same industry. So this is a brief introduction of myself. So I don't consider myself as a lecturer, more towards it's kind of learner, or we all learn to with each other. So it will not be a kind of teacher or student relationship. It will be an interactive session. So you all are free to contribute your points during the session. We'll keep on writing. Yes, we will have a pace. We have certain agenda which we need to follow. So based on the pace of the session, I'll keep on adding your point. Let's say you write something which is relevant. I'll write it here only. So it will be more or less an interactive session rather than one-sided. I hope it is clear to everyone. Fine. Just a quick understanding. How many of you are fresher? Fresher means just completed your post-graduation, MBA, BBA. Okay. How many of you are having work experience in the banking industry or any other industry? Okay. I just wanted to take an idea, experienced, just graduate. So it's a mix of both category. So I'll keep in mind that we have experienced and freshers also. So if anything is discussed in the form of basic, so experienced one should wait a little bit. Okay, Akartike, IT industry. Fine. So basic things will start with the foundation only, then gradually we'll move ahead. Fine, good to go. Okay, fine. Akash, I think your career counselor might have discussed all these points with you. So with me, you can discuss about course and content related. Other things you can discuss about these all points to the counselor. I think there will be a counselor who have discussed these all points with you prior to enrollment. So they might have conveyed the entire detail. Pressure in finance. Okay, Karthike, no problem. We'll start with the very basic so that you all should understand. Plus, in case during the session you have any doubt, don't hesitate to ask it again. I feel I can repeat it again and again, or even what you can do, you will be having a recording available with you. let's say we complete today's session. By tomorrow, the recording will be available in your LMS. You can check it, go through it. You can, but still some doubt is there, you can ask in next session, right? So today we'll discuss first chapter, that is basic or module, what you say, introduction to finance. Prior to that, I'll give you a brief about 2 months view, like roadmap, although it's a 6-month course, 2 months boot camp will be there. So we'll discuss about how I'm going to proceed with the module for initial 2 months. And then once we cover 2 months, we'll discuss about next 2 months plan. So plan of action for coming 2 months. Basics of finance, which we are discussing today. We'll complete it in 2 or 3 sessions, most probably 3 sessions. Then we'll discuss about economics. Then we'll discuss about fixed income securities. Derivatives, asset management, and mutual funds. Till now, it is clear to everyone? Let me just go through. Someone has written the chat. No problem, Mohan. You have just joined. We have just discussed about the starting point, how you are going to start. We are going to, for the 2 months plan I'm discussing. So in these 2 months, coming 2 months, we'll discuss these all modules, which are foundation, like basic of finance, basics of economics, fixed income securities, derivatives, asset management, and mutual fund. Fine. And how you can write the question during the session, you can write in chat box. I'll be taking the question and keep on responding. In case of any doubt, you can write, you can raise hand. We'll discuss that concept once again. Once we complete each module, let's say we completed basic of finance in 3 sessions. Thereafter, there'll be a MCQ test. So in that test, that will be uploaded to your LMS, and you will appear into that test. You will solve those queries. So in 2-3 sessions, if there is any doubt, anything, you can ask me. Maybe you can note down your query in the same session or next session. Or one more option is there, that is through ticket. You can raise ticket and connect with your mentor. They will respond to your query. This way we were discussing about what is the roadmap, what is the plan for coming 2 months. And once we complete this, thereafter we'll discuss for next 2 months. Right? So today let's begin about this introduction to finance. And yes, it's not a one-way session. It's an interactive session. So whatever points it comes to your mind, whether it is question or adding certain value, you will write in the chat box. I'll mention it on the PPT so that each and everyone can contribute. Right? Yes, Tanisha, you raise hand. Just let me know what is your query. If there is no query, then please lower your hand. Okay. So what are the subtopics which we are going to discuss today in that topic, basics of finance? Although finance is a very broad category, broad area where a lot of points, a lot of areas will be discussed. 1 second, let me read one point. Mohan. No problem. That is not an issue, Mohan. In case that what I have discussed for everyone, whosoever is having any query, I don't mind repeating the answers. I don't mind repeating that point again. If you are there in the class, be free to ask any question which is related to the topic. So don't worry about the background and all. You can grasp the things. That depends on how you take the things, how involved you are with the studies. So gap, etc. is not an issue. Okay, fine. So point of discussion, I was talking about point of discussion. What is finance? Broad categories of finance. 3 important decisions. What is the objective of financial management? few techniques of valuing a business, how we are going to evaluate a business, net present value, internal rate of return, these all will do in Excel. So before moving to Excel directly and calculating these things, I would give a brief introduction, means how you are operate. Some of you will be very new to Excel. How many of you have not even done anything in Excel? Nothing. Okay. Very new to Excel. Fine, fine. So what I'll do before I discuss about the time value of money concept, what I'll do, I'll discuss the basics so that you all should be used to how to operate, right? No idea, Reshmi. No problem. You all can do it. We'll go slow. Initially, if you find the pace is very slow, just let me know. Or if you find I'm going too fast, then also inform me during the session, right? You need not worry about the pace. I can manage it. I can go according to you. No, Tanisha. Nobody needs to make the notes. But yes, see what happens. The PDF which we'll share, I will share each and every PDF which I discuss, but there will be certain terms if I'm discussing it that might not be mentioned since it's a PPT, so you will be getting PDF. Now what? Maybe someone has asked some question which is a little different. I might be explaining this further. So if you want to note that, you can do so. But most of the things will be included in PDF. Right? But if you note down certain concept, that could be a good thing. Revision. Keep a notebook handy with you so that if you want to have some idea about new concept, you can. That Gaurav will be uploaded in the LMS only. No. Mail, nothing through mail. Everything will be uploaded on LMS only. So you need to check the LMS. You will be getting. Yes. Kartikeya, that will be shared once we complete the module. Till then, what you can do, you can see the previous recording. And number of times you can go through the recording. Class recording will be available with you. Right. 1 second. So fine, let's discuss. I think all the queries are resolved. So whosoever is raising hand, please unraise or lower your hand once your query is resolved. Otherwise, I feel that there is a question and I keep on deviating. Fine. So let's move ahead. We have discussed that NPV and IRR. For that, I was explaining about Excel. I'll start with the brief introduction, how you will operate these all things in Excel, and then we'll move forward. So basically, we'll do time value of money concept. Time value, although is a very basic concept, but if the foundation is good, like you have learned time value of money very well, it will be easy for you to go through the DCF model, right? Attendance and all thing, no worries about that. That all the team will be taking care of. Okay, that will be automatically updated, I guess. If all of the you are attending, that will be uploaded through LMS. Fine, so this is all we have discussed. These are the points which we are going to discuss and explain. Just give me a minute. Huh? Just give me a minute. Okay, sorry for interruption. Now, just raise hand. How many of you can explain what is finance according to you? I'm not asking about any definition. You all can go very simple. You can tell what comes to your mind. Yes, Akash, you can write. Anybody who has certain definition or concept, what is finance according to you? Write in chat box. Okay, wait. I'll read all the points which you are mentioning. If something is different, I'll write down on the right-hand side. So one more point, PPT is mentioned over there, all the points will be there. But right-hand side, whatever I'm writing, that means you all are contributing. Your contribution will also be mentioned over here. So one is saying raising funds, okay. I'm writing as it is. Then what I'll do, I'll just explain why you are writing, if it is right or we can connect with it or not. Raising funds. Okay, one point. Then bring together financial participant, market, product and services. Okay, Kartike. Bring together financial participants, market, product and service. So you talk about market, product and service. Then next definition or concept which is shared by Pooja, finance is the term for matters regarding management and study of money and investment, right? Managing economics. Economics and finance go hand on hand, but there is a difference. Management of money and other assets. Okay, Priyansh. So management of money, I have written in short MGT, that is management of money. Managing economics. I'll go quickly read the points. If something is different, I'll write down. Supply money or resources for business or someone to grow, right? Bring together financial participant, I have written. Managing the source and application of funds. Okay. Managing the source and application of funds. I hope visible writing is visible, although I'm writing too fast, but if it is not clear, if you are finding it difficult to read, I'll write slowly. No issues. Management of credit. Now, I'll just read all the points which you all are writing. So starting with first point, anything related to money is finance, okay? Means finance is related to money, number one. Study of money, management of money, raising funds. Raising funds, Harsh, is little different concept. It comes into finance only. You're right, but that could be in terms of IPO, that could be in terms of fund, uh, debt also. So yes, this is one of the important aspect which comes under finance. You are talking about the fundraising, you are talking about financing, equity financing and debt financing to raising funds can come here. Although there are different categories, if I talk about the public level, personal level, corporate finance. So raising funds, if your perspective is from the perspective of corporates who wants to go public, yes, that will be included. So right, management of credit and flow of cash through economies and business need, right? Then Gaurav mentions managing the source and application very well. So I'm elaborating his point, managing the source and application of funds. For example, putting it in simple way so that non-finance student can also understand. Managing the source. What is source? Whosoever is providing money. Let's say I need some money as a loan. So who is providing? Bank. And what is the application? I might be deploying that fund which I have raised for buying a house, housing loan, right? Or personal loan might be for the education purpose, for other purposes. So managing the source and application of fund comes in a branch of finance. Bringing together financial participant, yes, if we talk about the entire web or framework of this financial management, then you have mentioned about the market, product and services. So financial market, which is an equilibrium between the source and the application of fund. What are the products available? So products and services, we can talk about the financial products. You can differentiate it into categories based on the user. For example, if I'm an investor, for me, the financial products are what? Mutual funds, equities, means shares, fixed income securities, and these will be the financial instruments, some of the financial instrument. Services, asset management services, And for corporate, what could be the services? Just like investment bank. How investment bankers are offering services? Investment bankers offer services to corporates. It is not about the retail investor. If investment banker approaches, corporate approaches the investment banker for what? For helping them out raising funds. So investment bankers help them raising money. That is initial public offer. Initial public offer is not limited to only equities. It is through debt also, it is through equity also. That we'll discuss further. Fine. Let me read two more points. Merger and acquisition for corporate. Merger and acquisition, yes, this is one of the important aspect, or you can say the component, right? But initially, what we'll discuss, initially we will discuss about different levels. This come into corporate finance, M&A activities, LBO. Okay, one of you is not able to write HP. I can see managing money and all money related terms. I have seen your point which you contributed. Fine. I hope I read all the points. Anyone's point is missing, then please let me know or raise hand. I think I have read all the points. So this way only that is my strategy of discussing the things. So session will be a two-way session. You all will contribute. That way it will make interactive, right? If anybody feels that any other idea or anything can be contributed, your suggestions are also welcome. You can write in chat box. Okay, so finance, we have discussed all the points which you contributed, which is very well. I appreciate all of you who have contributed. That shows an active participation in the session. Fine. So we'll go, some term will be defined over here. 1 second. Here, you can go through these two definitions, which you can easily get. There'll be a number of definitions available for finance to describe finance. But what you all are describing, management of money and all, if you mix them together, yes, it is very much related to finance. One of you have mentioned about the management of money. Yes, but management of money, different aspects are there. Three broad categories are there: personal level, then public level, corporate level. So this way, management of money will be there. We'll take one by one and then we'll go into detail. So what are the different activities involved in finance? Investing, borrowing, lending, budgeting, saving, and forecasting, right? So investing, what? In finance, we can talk about the financing decision, investment. The three important decisions are there. We can connect with that. In personal finance, investing is related to personally, like financial planning, that is about the investing. Borrowing and lending, you all understand these concepts. Budgeting is preparation of the plan. Budgeting could be in terms of personal finance also, we can use the term budgeting. For us as an individual, we prepare a budget for our next goal, for planning better. Monthly budgets are prepared. Then we plan accordingly. Long-term budgets are prepared for different financial goals. That all activities are included in budgeting. Then talk about the saving, forecasting. Say these all terms. If anybody is having any issue with understanding these terms, please raise hand. We can explain. We can discuss with the help of example as well. Yes, anybody? Any doubt? Any question? Because slide by slide, I'll keep on asking the doubt so that it should be clear then and there only. No? Okay. Fine. Forecasting. See, Jefferson, forecasting is predicting the future. It's not about that numerologist or pundits we are talking. Forecasting means you need to prepare. I will explain with two examples. One is forecasting in terms of personal finance and corporate finance. Let's connect this term with corporate first. So what corporates do? How do we come to know about the value of a company? Based on the past performance of the company, we think that company will provide same kind of revenue, or even there will be certain percentage, growth percentage. Based on that, it will keep on increasing, right? Or in personal level, to make it more simple to understand, let's say I have invested certain amount of money, 1 lakh rupees. it is increasing at the rate of 12% per annum. After 5 years, what will be the future value? So I'm forecasting the future value not based on any perception. There will be a proper discount rate, that will be a rate of return. Let's say I'm getting 12% return in equities, or let's say FD is there 7.1% return. So 7.1% after 10 years, what will be the future value? This is value. There could be certain differences as well. Differences in terms of what? The value might appreciate, might decline as well. Because if I'm investing in such an instrument like equity, so returns are not guarantees. Returns are not guaranteed, but I'm forecasting based on past returns, right? So this means based on past returns, I am forecasting that I'll be after 20 years, what will be the value of my money? You can add inflation also. If inflation is 6%, what will be the actual amount of money? So we can take the present value of money today, right? This is forecasting about predicting. Similarly, if I take the example of company, if company is making X amount as a revenue, now next year sales will increase. If sales will increase, how much the revenue will increase? So based on certain percentage increase in revenue, how the company is going to perform, how the company is going to grow. So that is future value. I have received certain answer. Wait, let me first read. Forecasting. Akash, that is not in my hand, because that is the format of the class only. So I cannot control, means it is not in my control. You can discuss it with team or your career counselor, right? So what I'm doing is my best practice, so that you all should get points which you all are contributing, else it will be monotonous for me. So for me, it is a best practice what I appreciate to write down. Otherwise, I could go single, whatever I want to discuss. Okay, now Harsh has mentioned past and future growth potential, right? What exactly is equity? Mohammed, equity, we are talking about shares, like you know about the market exchanges, National Stock Exchange and Bombay Stock Exchange. Their shares are traded. Reliance Industries Limited. So what we call it as, in simple term, we use equity shares, right? So that means certain person, I have invested certain amount in equities. That means I have purchased few shares from market, that will be part of equity. And then debt, let's say I have invested in fixed income securities, that will be a debt component. So in simple language or in brief, I'll say my total portfolio includes this much percentage in equity, this much percentage in debt instrument, maybe some real estate instrument and all. So I will give the broad classification of asset class. This is an asset class from the investor's point of view. Request you to ask your doubts. Okay, Dheeraj. One example of lending. Okay, Tanisha. Lending example is, I'll take example from the perspective of corporates. Let's say ABC Limited is a company and company requires certain funds. So if company requires funds, what are the options available for company? Options available could be equity or debt. If I talk about equity, that means company has shares, so it will offer to public through initial public offer that you are aware about. Initial. Yes, Jefferson, I'll take all the questions. Let me first go take one by one. So one has asked about this example of lending. I'm explaining this, then I'll come to your budgeting point, Jefferson. Fine. So I was talking about lending part. So it has two routes. One is ECM, that is equity capital market, and another is debt financing, which you can call it equity financing and debt financing as well. Equity means they are offering their share to public and ownership stake will be sold out. Let's say they offer 20% or 10% of their equity. So that means that 10% will be now with investors, and investor will become owner of that 10% of that share of ABC Limited. Now, talking about the debt, what is going to happen over here? They have two options. Either they can go for bank loan, or they can raise money via issuance of bond. So if they raise money via issuance of bond, that could be having a certain tenure, maybe 10 years, 5 years, whatever that tenure of the bond. Here, what they need to do, here the corporate needs to provide a fixed amount as a coupon. Coupon is nothing, but you can understand it as interest rate, right? So here bond means, let's say they have promised to pay 8% coupon per annum. So till 10 years, they will get annual interest 8% as a coupon, and at end they will get the face value or the principal amount which they have paid initially. This is an example of debt or lending. So investors have lended the money in terms, and they have got bond in return. Once the bond will mature after 10 years, that is the tenure of bond in our example, they will get the in principal amount back. So this is example lending. And equity, this is long-term perspective. Let's say Reliance has some expansion plan, for example. They have raised the money through IPO. Now it is listed. So till what time I'll keep on holding the Reliance? If I'm selling it, someone else might be borrowing in the secondary market. So number of share outstanding remains same, but investors are changing hand. That means it is coming from one hand to another hand, but we are not selling it back to company. Once it is traded through secondary market, it will be changing hands between the investors only. Issuer has no role after initial public offer, right? So here it is initial public offer. It's not lending. It is ownership right. Equity comes with ownership right, and debt is lending only. Here, once the tenure is completed, they will return my face value or the principal amount, and then it is considered as complete, means paid. Okay, next is what? One example of budgeting. Very simple example of budgeting is, Jefferson, you prepare a budget for month, your monthly budget. From the perspective of investor, what you do? You have certain investment in terms of, let's say, your mobile bill, your conveyance, your fees, and other expenditure. Maybe if it is a rented house, rent, or you have purchased a house, EMI. This is what? Excluding these all, what is your income? What is your expenses? Income minus expenses. This way you will prepare budget. Saving will also be there. So I'm not giving the financial literacy session over here. So otherwise I would have that income minus saving equal to expenditure. But here, if you are talking about budget in simple term, how do you calculate? You have certain expenses, whether discretionary or non-discretionary expenses. So income less your expenses, you prepare a budget for monthly. For month, long-term budget means if you are planning for certain courses or other investments, then you will plan accordingly. That also will be included. Your premium, annual premium for any policy, loans, etc. will go. So that you will debit from your annual and monthly income, and then you will come to know about what is your budget. This way you prepare and then you change accordingly. If it is, there is some less amount, then you reduce certain amount from the expenses which are not required. Okay, now coming to next question. Who will decide the tenure and rate? Manish, I will give you one example related to that. Who will decide the tenure and rate? Let's say a bond, ABC company has raised money via bond. So that company will decide for how long they are issuing the bond. It has 10 years maturity. So if I am agree to invest in that company for 10 years, I will buy that bond. Else not. There are different bonds available with different maturity. So that company will decide this, but this is my choice to whether to invest or not. Right? This is one product, just like a financial product. If I feel that it is based on my requirement, it fulfills my requirement, I'll buy that, else not. So decision of tenure and rate is the company only. See, Mohammed, you talked about the initial public offer, mutual fund stock. We have separate modules for that. If I start discussing, that will be quite elaborating and we will mess up the things. So first, let me discuss about step-by-step process. The second step is about IPO and mutual fund. I'll keep on discussing that. That is a complete session. You will come to know how do we invest in MF, how do we invest in initial public offer. Complete process will be discussed about the initial public offer, how companies are offering shares, how investment bankers' role and responsibilities are there, step and process. So just wait for that module to come. Okay. Yes, HP debentures also. Price of IPO, see, Ronak, this is the point which you all are asking about, different module. But I'll give you a brief about your question. Who decide the price? It is decided through different mechanism. One is it could be fixed price or it could be book building issue based on the demand and supply. So cutoff price is there. These all things I will discuss in detail once that cash equity module will come. Yes, secondary market, Karthikeya, is a stock market. So budgeting, Gaurav, I have discussed about will you prepare a budget means your plan. Forecasting about the company means you think that at a certain rate it will increase and you will get that amount. You forecast about future situation and plan accordingly. Budgeting is different based on your current income and you know these things are there. You are not making any kind of assumption into that. You prepare a budget based on the current situation. This is my budget, and forecasting is where you use assumptions, where you are talking about at this rate based on the previous scenario, at this rate it is increasing, so it might increase at the same rate or you might take more than that. Compounding also will be taken. So that means you are taking an assumption of the previous data and then forecasting, predicting. Based on the past performance, company will do better. Based on the past record, company will do that. That will come into forecasting. And budgeting is based on the data in your hand, you are preparing. This one is my income, this one is my expenses. So now this will, how much will be left, how much will be less. Okay, how much is the scarcity? So how we are going to manage it. Right, I hope you understood now. Fine. So here, broadly describing the study and system of money, investment, and other financial instrument. So financial instrument, we will discuss in detail. Here, for the basic understanding, you know, financial instrument for the perspective of investors, it could be what? Equity. Let me take an ink. One second. So what I have written, here I'm writing, equity means shares. And mutual fund, that is part of equity only, because in mutual fund, what happens, either they are investing into shares or they are investing into fixed income securities, liquid mutual funds are there. So that means either it is equity or debt. So that is not a separate category. I'm not mentioning it as a separate asset class. So if I talk about asset classes, equity is there, debt is there. That means fixed income securities like bonds, etc., commercial paper, certificate of deposit. So that will come in the debt category, equity. Then there are different category of real estate asset class I'm talking about. So REIT investments are there, then gold, sovereign gold bond, and gold category of investments are there, right? So these are few. Derivative is part of that investment only. Either equity will be the underlying instrument or debt will be underlying instrument, interest rate, forex. These all are different categories. Yes, alternative investment also like hedge funds and all, that can also be taken into consideration as a broader perspective. See, Tejas, you have written one question. What is the difference between lending and borrowing? Lending and borrowing is simple. Let's say you require some money. So you will be borrowing. You borrow money from, what are the different options available for you? If you need money, means you will borrow money. What are the different options? Bank is there. So you go for borrowing. So bank is lending you money. Lending means they are giving and borrowing means we are taking money. Clear? or you want to understand from different perspective? What I understood from your question is simple. Commodities, yes. Okay, so precious metal, etc. If we talk about it can come into the derivative segment also. Underlying instrument is commodity. So in commodity, we have precious metal, we have like these instruments, like agricultural instruments, etc. That can also become interest rate derivatives are there. Foreign exchange, USD INR means forex derivatives are there. 6 pairs are there which are traded through derivatives. Okay, now moving ahead. Three broad categories of finance. Three broad categories we will divide into public, we will divide into corporate finance and personal finance. Just go through these points. If you find anything which is not clear, let me know. Although I'm going to explain it in detail as well. In the meantime, I'll read the question. If any specific question which I missed, I'll reply to that. Kartikeya, I don't feel I'll be appropriate to answer this because that I don't have the sound knowledge of that product, crypto. Okay, any specific question related to this PPT, this page? These three broad categories. Now I'll explain it in brief or by quoting certain example. So finance, we have divided into three broad categories. One is corporate, one is personal, and third is public. First, I'll take corporate finance. What it is, corporate finance? They manage asset, liabilities, revenue, and debt for the business. How do we do this? That will be discussed via cash flow management, while financial statement. Three financial statements are discussed to find out calculate the discounted cash flow methods and different things, and how corporates are taking the decisions, investing decision, financing decisions. This is depend on widely. This is depends. It depends on the financial health of that company, right? Now, funding decision, how they are going to funding decision, whether the equity financing will be suitable or debt financing, how they are going to decide that based on different scenarios. Let's say there are two options available with the company. They can go for equity, they can go for debt also. So whether they are interested to sell their stake as an equity, or they want the investor to become owner of that stake, or they are okay with loan. Because cost of equity will always be higher than cost of debt. Cost of debt is lower. That provides the tax shield to the corporates. So, but that depends in the capital structure of a company. They cannot include more debt. Okay. So this way, the capital structure is being decided. They need to think about, they need to finalize what is the better option for them, whether going for equity and debt. Through equity, what they are doing, they are diluting their stake percentage equity, that is exit strategy once they go through IPO. For debt, what is going to happen? They have different options available, either through bank loan. For bank loan, the amount should be sizable. Is the amount sizable for that bank loan? Then they need to follow the corporate governance norms, due diligence aspect. If all are okay, then the proceed will be given. Thereafter, the interest rate will be high in that case. For example, if bank is charging, let's say 15% or 12%, if they are raising money via issuance of bond, how much they need to pay? What is the bond yield? Nearly 7 to 8%. So here what they are going, if you are a company, then which option you will prefer? Going to bank for a loan or issuing via bond? Even bond issuance is also requires certain criteria, corporate governance norm, approval. So these due diligence aspects are there. But if it comes to interest rate, So what they are doing, for bank, they need to pay higher amount, and for raising money via issuance of bond, it will be less. It will be cheaper for them if they are opting for loans, because they need to pay 8% rate of interest, or coupon interest, coupon rate, right? Okay. Yes, Gaurav, it comes under corporate finance only. Okay, not brief about that is discussed. Now we'll talk about the personal finance. All financial decisions and activities of individual household. It includes budgeting also, it includes mortgage planning, saving, retirement planning. That means a complete financial planning perspective. Means if you want to think about your budget, your life goals, you are talking about how how much amount you require for your retirement, what is the insurance required for home loan, how much amount is required. These all decisions are taken or are counted in the personal finance, and who helped you out? A financial planner helps you out to finalize, to help you out to prepare a concise, consolidated plan for this, right? Which includes budgeting also, your cash flow, how much is your net worth, estate planning. This we'll discuss in brief today only about the personal finance, but we'll not go into more detail about this aspect because we are more concerned with the corporate finance part, right? Now, coming to the public finance here, we are talking about tax system, government expenditure, budget. There will be different policy stabilization, debt issuance, other government concern will be there. Debt issuance means not only corporate are raising money, government also raises money. Government also raises money via issuance of bond. You might have heard about different instrument which are state development authority, means the once the state government issues certain bond, that is SDL, state development loan. And if the corporate governments are issuing those bonds, it is GSEC, government securities, which are considered as safe instrument because government is backing these instruments. But if it is secure, they promise to pay less interest rate as compared to the corporate bonds. Reason being, you are paying for security, right? What is government expenditure? See, Manish, government expends in different areas for development, for expansion purpose, for road infrastructure, hospitals, basic requirement related to all the means nation, right? Stabilization policy. See, stabilization policy means price stabilization. We are here concerned with the price stabilization part. How the prices will be stabilized, right? How the prices will be stabilized. Just give me a minute. I'm receiving a call from the technical team. I'll respond to it. Just stay there. Let me just share my screen. I think screen is visible to all of you. Please raise hand. All of you can see the screen. Okay, let me go to that point. Sorry for this inconvenience, because some of the students were not able to join, so they connected with me. Okay, fine. So we discussed till here. Let me take the question. Okay, fine. So we have this, Sanyukta, yes, Sanyukta, you have raised hand. Please let me know. Just write your query in the chat box. If you have any question, you can write it. Fine. So is there any question from the previous PPT, previous page? TIS? Karthike, what exactly you want to ask TIS? See, you can understand a same simple example, Tanisha. What happens? What is the rate? How the subsidies are provided by government? So what they do, if they are providing something like this, so that simply means they are managing the finance. They are managing it on a level of nation. I'll give you one more example, how these things are interconnected. You might have heard about Lehman Brothers crisis. How many of you are aware about Lehman Brothers? 2008 crisis. All of you are aware. So I'll give you a very simple example for that. Structuring, debt restructuring can be done, how the government involves in these things to help the economy. What happened during that time? Yes, slow down, not only Apurva in America, it same day what happens, Dow Jones has gone down, industrial average has gone down by 4.5%. And not only the US market, all the things, all the different market were also, all the different markets were also. It is a complete case. If I get time somehow, I'll discuss that case study with you all. But here I'll just give you a crux what happens. What happened once these all Lehman Brothers subprime mortgage crisis happened. So the all mortgage borrowers have defaulted. Then what the government has done, they have done the debt restructuring. They have given bailout packages to AIG, and then they have saved different bank. But Lehman Brothers could not be saved. Reason being, the amount was so huge that the federal bank could not help them out. Now, how they did the debt structuring part, which I was explaining, is they have reduced the tax. They have reduced the tax so that if the tax burden will be reduced to these lower income group, they will be able to pay the EMI and they will not default. And the second thing, what they have done, they have increased the tenure of the debt. So this was one measure of debt restructuring, which was done by the government to save the economy, right? So similarly, if we talk about the real rate of the things, is it provided to each and everyone at the same rate? You know about the subsidized rate. What are these things? This is how they are stabilizing the price. Right? Understood? One second, Kartike, you are asking about raising fund using debt is best choice for corporate. See, for the long-term equity is the option. For long term, you have come up. How many of you are aware about the recent IPOs? How many IPOs have come? So what they are doing, if only debt is okay, then they might have taken a bank loan, or they could go for the debt instrument like fixed income securities, etc. But what they want, equity is another option. They are not diluting maximum stake. They are not selling the maximum stake. There is certain percentage they are offering and they are growing. There are different advantages of that also. Like if the company is listed on public sector, liquidity is there, then the brand image is there, how much they are earning, investors' loyalty, the long term, they will be associated with the company. If the company is growing, they will grow also. They come up with the follow-on public offer as well. Means they are selling more stake because the public are also participating. They have a trust. Their brand image is increased. Yes, Apurva, right. Loans to, yes, subsidized rates and these all things. How the government is participating to grow it. And green bonds are there. What they are doing for raising money from public and investing it for the development of country. What is the state development loan? They are raising money. State government is raising money from the investors, and whatever money is collected, what they is that is deployed for the development of state only. And they are promising to pay certain rate of interest, which is in the form of coupon amount, which is paid twice a year, semi-annual coupon rate, which they promise. Similarly, the government also, GSEC, the government bond, which is being issued by the central government. So this way they are raising money. Green bonds are another initiative. So in green bond, what happens? ESG factor is included. Environmental, social, and governance means they are not harming the environment. They are taking care of the ESG parameter, and they are whatever money has been collected, whatever money they have raised from this green bonds, they are utilizing it for the environmental purpose to enrich the environment. Yes, Sanyukta, you raised hand. It will be better if you type your question in chat box because I could not understand what you asked. Or if your query is resolved, then please lower your hand. Fine. Now talking about personal financial. Till now, if there is any, please let me know. Okay, fine. No doubts. So now you can see the personal financial planning. We are not discussing it in very detail, but still I would like to give you a brief idea so that you should understand what are the different areas which are covered in the personal financial plan, right? So here it is from the perspective of you as an investor. We are talking about individual investors here, personal. It is not about the corporate. It is not related to the government. So here, as we as we plan for our future, these all are goals based on goal-based planning. So educational planning is one, cash flow planning, investment management, retirement planning. These are the different parameters, different areas or the steps involved into that. Anybody aware about what comes in estate planning? Yes, anybody who are aware about what is covered in estate planning? Buying asset, real estate and land. Apurva, I asked what is covered in estate planning. Okay, the answers which I got is not exactly the bullseye. So I'll give you a brief about that. See, this is estate planning is about bequeath. Bequeath means you are planning to provide succession planning in simple terms you can understand. Estate planning is the succession planning. Anybody who has different instrument assets that could be in terms of land, property, investments. So all the assets are there. After that, to whom they are going to provide, whether it's the legal hire or if they are not having someone, then so proper planning is being done to succession planning is being done so that it should reach to the legal hire of that person. Fine. So nowadays it has gained more popularity. The reason is nuclear planning. During previous decade, it was not so common. Reason being, the joint family was there. They need not prepare a proper documentation for that. But nowadays, it has gained more popularity because of the nuclear family. The risk is there in terms of life also. In case anything happens to the couple, so what is going to happen? Who is going to? How the succession plan will happen? So they prepare a trust so that in certain circumstances, trust will take care of that entire asset, and then it will be transferred to the legal hire or the beneficiary once it attains majority. That means above 18. Right. So these all concepts are included in estate planning. That means to whomsoever it will be given after the death of that investor. So they prepare a proper plan during their existence only. So sometimes live will is created, will is prepared, and then there are different provision. Trust is created, living trust is created. So this is quite a vast area where we are not digging into detail. But yes, for basic understanding, you just understand how the succession plan will be there. They planned more examples, Rahul, in for what? For this estate planning only. This is simple. Let's say I just take one example. There are one investor, means couple are there. They have only one offspring, one child is there, and child is nearly 4 years old. Now they don't want the child's to be secure future. Whatever net worth they have created, it should reach to the child only, but it should be in a safe hand to whom they will create. So for that, what they do, they create a trust. Trustees will be there. It will be entirely in terms of documented. These all are documented through wills are created. So these all aspects are dealt in the state planning. All the assets are pour over will is created where during the lifetime of that investors, the living will is created, and then in case they are no more, that is transferred. All the assets are transferred to trust, and the trustees will take care of the amount or whatever the net worth is, and that will be transferred to beneficiary once beneficiary attains maturity. That comes in the state planning area. Now coming to tax planning, not going more detail about the tax planning, you know about how they are going to manage their tax optimization should be done. Means old tax regime is good or new is good, what is beneficial, what are the different options available so that they can optimize their tax, they can save their tax. Not the tax evasion, we are talking about tax optimization. That means investing in certain option by which they can save tax. Right, there are two different words, not evasion. I'm not talking about evasion part, talking about optimization. Right. So this is tax planning, which is dealt in the personal financial plan. ATC means what are the different benefits they can get under ATC, ATD, 124 for the housing, like house loan has been taken. So how much they can save by taking loan. Agriculture income is there. So how much they can save with agriculture income as well as other income is also there. So these all computations are done in the area of tax planning. Then the retirement planning, how much they need to save for financial freedom. That means once they have planned their retirement, that means over 60 or 55. Then from 55, what is the life expectancy if they're based on their ancestors, based on their parents, grandparents, average is taken, let's say 75. So they feel that 75 or 80 is the life expectancy for this 25 or 30 years. How will they survive if the inflation goes at a 5% or 6% rate? What is the current expenditure? So how much they will be requiring? This all comes in the retirement plan. And what are the different instruments that can provide pension and all? This part is covered in the retirement. What is investment management? So investment management, here the different instruments are discussed. What are the different instruments based on their risk appetite, based on goal, the instruments are suggested. Once they require the money, then that will be how much return they are giving. For after 3 years, if they require, in which instrument they should keep. Because if anybody is requiring, for example, if anyone is requiring money for educational purpose, and the child is going to get the education, higher education after 10 years, they should invest in the instrument like equity, which is long term. But if they are planning for short term goal, like buying a car, buying a property within 2 to 3 years, they should invest in certain instruments which are safe and secure, because they after 3 years, if they want to withdraw, they should get the amount. It should not be like based on the market scenario that money has been depreciated. So this way different buckets are created and proper planning is created in investment management. What investment instrument should be taken for how long, switching, asset allocation strategy, tactical asset allocation strategy. These all are included in this investment management part. Then cash flow planning, proper inflow and outflow. You can decide it based on when they require money. Let's say after 10 years they require money or 15 years. So in case of, let's say, retirement planning, every month if they require, let's say, 1 lakh rupees per month, how they will survive, how much they need to invest today to get 1 lakh every month after 20 years. So these all cash flow planning. And if they have let's say they have invested in certain instruments which are giving, let's say, fixed return 10% or 12%, how much that amount will grow, taking inflation also into consideration, what will be the real rate of return, how much the real value they will get. So these all cash flow planning will be included over here. Then educational planning, I have given a brief, like for higher education, how much amount they require, then taking the inflation also into consideration. If they require after 5 years, that let's say 1 crore after 5 years. So I will not take 1 crore only. That will grow at the rate of 6%. If the inflation on education is 6 to 8%, so that will be growing at the rate 6%. Today it is 1 crore, but after 5 years, it will grow. So that amount, that future value should be taken into consideration while preparing the plan. Okay, so I have covered in brief about all the aspect. Yes, risk management. I'll just read. Yes, 1010D, ATC, ATD, Nitisha. I'm pronouncing right? Nitiksha, yes. Right, 124 also, 124A. Like different sections are there based on which agriculture income, there is one more part. Then you can take other for, let's say, if I'm missing something on that section, that would be 49 related to the income, which is from different sources, income from different sources. They're like someone who is doctor, they are earning a amount based on the receipt, how much they need to disclose. These all things are there. Not in detail, we are discussing, but yes, you understood right. Okay, any doubt, any question related to what we discussed? Risk management is nothing here. The risk management, since it is related to personal finance, we are talking about insurance perspective. Right? How much insurance means term plan is required. And then insurance is not limited to only life insurance. It will be health insurance also, health and other parameters also will be covered over here. Now the things have come to such a pass where uh, there is assisted living and all based on different diseases, the riders, covers, top up, super top up, these all are there. This will also be included in the risk management for the health segment part. Okay. I hope I have given a quite fair idea about this personal financial planning. Any doubt related to this? Just give me a minute. I think there is some issue. So some of the students are not able to join. So the technical team is asking me to share the link. Give me 1 minute. I'll share the link of this class to them so that if someone is not able to join, they can join. Just bear with me. Just give me 1 minute. Yeah, sorry for disturbance. Actually, what happened, some of the students were not able to join due to some technical issue, or the class session was not showing to them. So they are quite connecting to the students. Some of you have joined recently. Just raise hand. How many of you have joined recently? One, two. Okay. So I'll just explain you a quick brief. The session is recorded. What you all can do, you can go through the session from LMS, but still if you have any doubt, any query, you can connect with me tomorrow as well. So tomorrow what I'll do, I'll start the beginning session will be a refresher, like quick review of whatever we have discussed today. That I'll also discuss tomorrow as well, because some of you were not able to join in time. Is it fine? Yes, Girish, you have started. No problem. We have just discussed the previous point. Tomorrow also I'll discuss few of the concept again. Meanwhile, you can go to the recording, and if in case there is any doubt, I'll take the doubts tomorrow as well. Fine for everyone? Okay. So this PPT, any doubt, any question related to this? Anybody who has any doubt, any point which is not clear? Okay. So let's move ahead. Dheeraj, PDF will be uploaded once we complete the session. Okay. Vishnu, you can go through the recording. Today it will be available, or by tomorrow morning it will be available in the LMS. You have any doubt, you can discuss with me in tomorrow's session. Then what I'll do, I'll cover tomorrow a brief. Initially, I'll cover the brief about whatever we have discussed today. So tomorrow also a brush up. Session has started at 4. Tomorrow also session will start at 4 p.m. Okay, so quick refresher for tomorrow as well. But today, let's complete this part, right? No, Kartike. It's not like that, because there is some technical issue. Maybe this link which I have joined was little different. Yes, you should be available. Whosoever are there, class is not postponed. Stay there only. Okay, fine then. Anybody would like to ask anything, whatever we have covered, then I'll proceed. No? Okay. So now second part is about the public finance. First part, we have discussed about the 3 broad categories. For others who are requesting, I'll just give a quick brief within 5 minutes for whatever we have covered, not elaborating in detail. Then so that they all also can be with us, right? It will hardly take 5 minutes. So let me go back and discuss with them. So what we have started, a quick recap. Initially, we have started what are the agenda, what are the points which we are going to cover in this basics of finance. We have started basic of finance module, which is the beginning module. So this is the agenda which we will cover during this module. What is finance? 3 broad categories, 3 important decisions. Then what is the objective of financial management? Few techniques we'll discuss through TVM, time value of money, where we will calculate NPV, net present value, IRR, internal rate of return, right? So for most of you who have raised hand that they have not fair hands on Excel, once I start time value of money, prior to that, what I'll do, I'll just discuss a brief about how to operate so that you can be used to for the Excel, and then we'll begin from the basic concept only, and then gradually we'll move forward to discuss about NPV and IRR. Fine. This is the basic agenda which we are discussing. Then we started about what finance is. It's a management of money. What are the activities which we involve in finance? It is investing, borrowing, lending, budgeting, forecasting. These are the basic aspects which we discussed in finance, management of money. Then 3 broad categories. 3 broad categories we have kept, like public, personal, and corporate. So public level, what happens where the role of government is there, which is based on like tax, revenue, these all things are there in terms of public finance. Then if we are talking about the personal finance, that is quite broad category where we will discuss about personal financial management. Personal financial management from the perspective of an investor. What are the different products? What are the different areas where they are going to invest? Retirement planning, then investment planning, estate planning, risk management, and different aspects which are corely related to the individual, right? So this we have discussed. Personal finance, I was just elaborating. For public is from the perspective of the government concern. Now, corporate finance, here we are talking about how corporates are managing their funds, whether it is equity financing or debt, how they take decisions, funding decisions, investment decisions, right? So funding, if I briefly talk about the funding decisions, I will talk about the equity financing and debt financing. So that means equity financing means they are sharing their equity. They are selling their equity to the investors. Now investor will become part of that portion based on their units, based on how much they have received the shares in IPO, initial public offer. Talking about the initial public offer, we will discuss initial public offer in detail once it comes to cash equity module, or in between also wherever the term comes, I'll keep on explaining this, right? Whosoever have newly joined, just let me know if there is any issue. No issues, okay, fine. Okay, so we have discussed about this now. Then I have explained about the personal financial planning. I have just now explained it thoroughly about what are the different component which are included into that, giving some examples about that. What you can do, you can refer it from the recording. In case you have any doubt, I'll explain it further again. So tomorrow, let's say you have certain questions, you can pen down, you can notes. Yes, for notes, it's not necessary for you to prepare notes because PDF of the session will be shared with you. But yes, if you want to note certain points, for example, these are only circles which are areas like risk management, estate planning. It is not mentioned in the PPT or the PDF. I have explained it. So if you want to write, you can write what comes in estate planning, what comes in risk management, short. That is for your purpose. Okay. And here, personal financial management is not corely included in the module. So here, that is why I have explained certain things which you should understand. At least you should not be having a blank part in terms of personal finance. So that's why I have given a brief idea about each and every parameter which is included in this. Yes, Sayukta, I can see you have raised hand. How many of you have raised hand? Is there any query? 3 of you have raised hand. Okay, one of you have written that, can I explain this in Hindi? I can explain Hindi. It's not difficult for me to explain everything in Hindi, but yes, that again will take double the time. But yes, I can help you out. If you find any difficulty, I will help you out. Right. Please write your name as well. Anybody else is facing any issue related to the language? Yes, Arjun. PDF will be available in the LMS. Whatever part you have missed, you can go through the recording. First point, I'll just repeat once again. Whosoever has missed the beginning session of 1 hour, they can go through the recording, which will be available in LMS. By tomorrow, you can check your LMS. It will be available from the beginning. One. Second thing is, tomorrow, once I begin the session, I'll again start describing all the concept again in brief, so that whosoever has missed, if they have any doubt, any question, they can ask during the session. So no worries for both the ways. One is recording. Second, tomorrow also I'll begin with brief idea about all the things which I have discussed today. Is it okay? Understood, all of you? And yes, once it comes to PDF, The moment we finish the session, the PDF will be uploaded. Not this session. We are talking about the complete session. As we finish the module, this module, it will be available. Okay. Yes, anybody else who is facing issue related to language or not getting, want me to use Hindi? Okay, fine. Everyone is comfortable then. Okay, for attendee who has written about the explanation in Hindi, you can write your query through ticket. I will explain you whenever you will be needing any help. I can help you out. Okay, I'll resolve you. But during the class, I think it will take long time to explain again, like one time in Hindi and translating in English. But yes, I will, in case you need any support, I will separately giving you detail about the concept which is not clear to you. Okay, I can go slow as well. How many of you feel the pace is fast? Shall I go slow or this pace is fine for everyone? Fine, fine. Okay. Okay, okay. Most of them are okay. Someone wants me to go a little slow. There is no problem. You can connect with me. If you find any difficulty, I will help you out. I can explain it again as well. Okay, fine. So now talking about coming back and talking about the public finance. So as we have discussed about one aspect related to personal finance, then second aspect related to corporate finance, third is public. Most of you were getting certain aspects which you feel that what is the objective, what is the purpose for this public finance. So here I have mentioned the points also, like what is the basic objective of public finance. Here, as we manage our own finances, as a personal perspective here, the government is managing a nation. So managing a country's revenue will come under public finances. So here, debt, expenditure, different government. What is quasi-government institution, which is mixed? Quasi is mixed, right? Government, pure government institutions, you know, this is the government entity. Quasi-government means semi, like mixed, which is not purely holded by any corporate or not entirely held by government institution. Now, talking about the revenue, country's revenue collection, various investment, taxes, we all are filing the taxes, we all providing the taxes. So what all is included in this stream in public finance? These all revenue stream is there, which is for the country's revenue. They are managing it. So public requirement is met out by the amount which is collected. Then how they are deploying that fund for economic growth and development. They are deploying that fund or revenue which is being collected through economic growth and development. And once it is deployed in such a manner that helps reduce the inequality. So one example we have discussed about the subsidized rate, like certain products are available at subsidized rate so that it helps out reducing the inequality. Someone who is not able to afford that, they can also afford it. Otherwise, if they take out the subsidy, then it will be difficult for each and everyone to afford that. So establish price stability also. These all points are interconnected. Reducing instability, equality, reducing inequality, price stability will be maintained by this. Economic growth and development will be met out. Public requirements will be met out. This all area is covered into the public finance, which is one of the broad category of finances. Okay, now talking about corporate finance, just give me a brief idea what you understand by corporate finance. Just raise your hand or just write in chat box what you understand by corporate finance. Not asking about the definition, whatever you understand from your simple language or basic perspective, you just write it there. Okay, 1 second. Let me write down what you all are thinking in terms of corporate finance, loan, IPO, management of financial resources. Okay, from where to raise fund, how to manage equity. Okay, raising funds, investment of a company. Okay, fine. So you all have written certain points. I'm going through it and reading it for all of you. Investment of a company, loan IPO you have mentioned, then operated by organizations, management of financial resources by business, from where to raise funds and how to manage equity. Then money management of companies, managing capital structure, yes, because we are talking about the mix of debt and equity. We are talking about the capital structure as well. Managing capital structure, disbursement of funds, follow on public offer, borrow money, equity, yes, IPO, FPO, private placements. These all will be included in this part. Yes, capital. Working capital management, yes. So all of these activities which are required for corporates will be included in this aspect only, in this broad category data. Fine. How business fund their operations in order to maximize profit and minimize cost? What is the main objective of business? Main objective of any of the business is to maximize their profit. No business, no corporate wants to get into losses. What they want, if the cost is minimized, then definitely the profit margin will be maximized. How to minimize cost and maximize profit in the core idea behind the operation of business. What exactly the purpose or the objective of a business is. So for that, they need to take care of the funding decisions. What could be the judicious mix of capital structure? Means how much debt component should be there, how much equity, because both comes with cost, whether it is debt or equity. The cost of debt is there for debt segment, or cost of equity is involved in case of if they issue equities. So both is there, but debt is less costly. That is cheaper because that gives the tax shield also, right? And here, in case of equity, the rate or cost is higher as compared to cost of debt. In case of debt, what happens if they have borrowed through, let's say, bond? So then they need to pay a certain percentage. Maybe the current is 7 to 8%. So that will be their cost. But irrespective of profit or loss, they need to give that. Whatever coupon they have promised to pay, they need to provide that irrespective of profit and loss. But what happens in terms of equity? If they are making profit, the value will be appreciated, dividend will be given to equity holders. If there is losses, then maybe the equity prices which are trading, if they are through market risk, if they have come down. So investor, if they sell out, they need to bear loss as well. But in case of debt, they know about the future cash flows, future cash outflows in terms of coupon payment, right? So here I have given you brief about the what kind of business debt financing and equity financing work, and how they know how much interest needs to be paid, how much expected interest rate from the equity investor, and what is the expectation in terms of debt investors, right? So both have their own pros and cons. So corporates are not taking only one portion. There is a mix of debt and equity, and how they are going to decide that depends on various factors. That is not dependent on only one or two factors. They have different scenarios, different factors, right? There is no thumb rule of, so we can say this much debt is okay, or this if it is less. That depends on other factors as well, right? Growth perspective and credit worthiness. Okay. Profit growth, working capital, this you all have written in the chat box. I'm just checking if I missed any question. Okay, fine. Ranging from equity investment to credit. Okay, I'll explain. See, business obtain financing through a variety of means ranging from equity investment to credit arrangements. That is, we are talking about different ways by which corporate raise money. I have explained you about equities. So equity means what? They are selling their share. Any company comes up through IPO, what they are doing? They're selling their equity stake. For example, if we talk about last to last year, like LIC IPO and other different, CRISIL has come up with IPO, DOMS has come up with IPO. So what these business are doing, they're obtaining money, they are obtaining finances through equity only. Means they are selling their equity stakes and the investors who have applied, they get the allotment. Now they will become the owner of that much stake, proportion to which they are holding the number of shares. Other things, what could be the option? One is through bank loans. They can go for the bank. Also, due diligence is there. They need there. It needs to be a sizable amount of loan. They should complete the basic due diligence requirement, and then the regulatory requirements are also there. So in that case, there is certain time duration. It takes certain time. For equity also, for equity, it's not like they can go for IPO immediately. There are certain steps involved into it. They need to go for SEBI approval. They need to go for stock exchanges approval where they want to get listed. Draft ready hiring prospect is prepared. Their basic requirement, which is there for as per the SEBI rules and regulation, they need to complete that. If SEBI gives approval, then the second stage starts. Otherwise, they need to again go and make certain changes if possible. If it is up to the mark based on the regulatory requirement, then they will get a green flag and then they can move forward, else not. Fine. So this is about other options available, just like debt we are talking about, Tanisha, right? So they can take loan from bank or arrange a line of credit, that is also through debt options. It deals with monitoring cash flow, accounting, preparing financial statement and taxation. We are talking about the corporate finance only. So cash flow management in terms of both ways, whether it is in the form of equity. So if they are making profit, dividend will be given. If they are not providing dividend, then retained earning will be there, that will be reinvested in the business so that business can grow. Then financial statements are analyzed. Taxation will be based on their equity and debt mix. Okay, so what we have discussed initially, what is the goal? Maximizing the value of business through proper planning and implementation of management resources. And they balance the risk as well. It's not, so risk component, we can talk about how much portion should be there in terms of debt on equity. If they are not able to repay the debt, that is what business risk involved. Okay, you know about the credit event. What are credit event? Credit event could be in terms of like bankruptcy, moratorium period, default in terms of paying the coupon amount, default, default in terms of paying the value of the bond or amount with when it is due. Just give me a minute. So that means these are default event, credit defaults. Okay, so they need to maintain risk also, whether they will, since they know about the cash outflows. How you can understand this? Let's say a company issued a bond, corporate bond, for 5 years. 1, 2, 3, 4, and 5. So here investor has paid certain amount, that is par value or the face value is paid by the investor to company. And company has, let's say, promised to pay 8%. Let's say face value is 100 rupees for the bond. 8% of this 100 rupees. If it is 1,000, then 80 rupees. 100 means 8 rupees per annum will be paid to the investor as a coupon. And here last will be 108, means including this 8 coupon amount plus 100 par value. Now they know this is the cash outflow. That means the company needs to pay this 8% on an annual basis. So they know about the cash outflows. This, and if let's say they have raised that much amount, which and company is not profitable, they are not able to repay this. So what happens? That is credit event occurs. That means default, moratorium period, bankruptcy, failure to pay, failure to default. Fine. So risk also needs to be maintained, that much debt, which they should be generating profit and they should be able to pay on timely basis once it is due. See, Ronak, due diligence is nothing means the compliance requirement. Compliance, I'll make it very simple to understand. Let's say you open an account in bank. So in from the bank, what are the due diligence? As a retail investor, they will ask about your PAN, they will ask about your Aadhaar card, they will ask about passport for address proof. So IT address proof, what these all KYC requirement is basic requirement to open an account. So bank does it, their bank officials document, they verify your document with original. This comes under due diligence. Now, this is general due diligence, simple due diligence, general due diligence. And then there are certain enhanced due diligence as well. That means corporate accounts is there, their limit needs to be checked. So further documents are asked, further documents in terms of income proof, if any foreign transactions are there. In terms of bank, you can understand these are compliance requirement. Right? Yes, that will lead to Nitiksha AML procedure we are talking about. So due diligence in terms of bank and KYC I have explained. Now here you are understanding in terms of what you wanted to ask, Rona. I think terminology is clear to you. Now due diligence in terms of IPO. Now I understand this, how this due diligence will be checked. There are certain norms. No company can easily go and say that I want to go public, I want to go for IPO. There are certain basic requirements. If they fulfill that, then only they will be able to go for IPO, else not. So SEBI, Securities and Exchange Board of India, has certain rules and regulations which needs to be followed by corporates. And these rules and regulations are prepared to keep the investors' interest into mind. Right? So what are the due diligence parameters? For example, what should be the net worth of company? For how long they should be making profit? If they have recently changed name, they should declare it. What are the different other criteria? So these are the basic criteria. What should be the net worth, and for since how at least out of 5 years, 3 years they should make profit. Number of shares underwritten, how much should be the total amount which is raised. So these all are comes under due diligence, and these all parameters are included in draft red herring prospect. And once the due diligence is clear, compliance are there, that is clear, then only SEBI approves that the okay, so that they can go public. Then the next step is forwarded. Yes, Krishav, you have raised hand. 3 of you have raised hand. Please let me know the question or type in chat box. Okay, Ronakli, thank you. Any other who is having any doubt? Okay, no doubt. Fine. Now moving to entities involved. Entities involved means simply putting it, parties involved. What are the different parties which are involved in the transaction? These transactions which are related to public finance, which are related to corporate finance. So here I'll go one by one. We'll discuss investors. So retail investor, HNI. HNI is nothing but high net worth individual. Retail, like for example, you and I will fall in the category of retail. Might be HNI also, but that is high net worth individual. Retail means there are certain definition in different perspective. That might not be same for each and every instrument category. For example, if I take the IPO, initial public offer. So in case of initial public offer, who are retail investor? Less than 2 lakh rupees application will be to retail category. Then HNI. Fine. So this retail doesn't mean that anybody who is investing Less than 2 lakh is retail. There are different criteria. For PMS, there are different criteria. That is portfolio management services. Portfolio, there is different criteria. So retail means someone who is below HNI category who are investing less amount will fall in the category of retail. High net worth will be a certain category which is more than 50 lakh in certain instrument. In certain instrument, it could be 25 based on different product and company category of the instrument. Now, this is about investors, like individual, high net worth or retail, but they are individual investors. Now, second category is corporations. Corporate means different entity, whether it could be public corporation or private limited, like public limited company, private limited company. So these are what? Not the individual entities, these are corporates, means companies. Third is what? Institutional investors. So what could be institutional investors? Some institutions like MF is what? Mutual funds, pension fund, P firms like private equity funds, venture capital. These are institutions. These fall in the category of institutions, right? So they are also investing. So investing, like parties who are investing could be in form of any of these. Whereas if we talk about sellers, means there will be two parties involved in the transaction. One could be the buyer, another will be the seller, right? Are you getting my point? What exactly I wanted to mention here? So don't get confused with these terms, like institutional investors are there. So institutional investors can also be buyer. It's not that they will be sellers only. For example, if I take here only mutual fund category, so mutual fund will be what? Mutual funds are investing that amount. So they are buy side investors, buy side entities, sell side entities in investment banking. So they are buy side if they are buying. In sell side will be what? Whosoever is providing the recommendation and services will be sell side entity, sell side investment bankers. Okay. So these are the brief about what are the different entities involved in the transactions. Transaction pertaining to finance, whether it is public finance, corporate finance, public finance, corporate finance, and personal finance. In case of public finance, the government is one entity which is involved, and then another party is investors. It could be institutional, it could be any of the category. Now, any doubt related to whatever we have covered so far? I can see 2, 3 hands, but are you able to write the question in chat box or not? Whosoever has raised hand, are you able to type in chat box? Yes or no? Or you forgot to lower your hand? Just give me a quick confirmation. HP, you asked about the buyers and sellers from institutional investor. So in case of institutional investor, who are institutional investor? For example, MF company. What happens in mutual fund? It's a pool of investment. Yes, Kuntal, I'm telling about the mutual fund only. So the question will cover both of your question, Kuntal and what you asked HP. So first, what is mutual fund? Mutual fund is a pool of investment. That means they are investing in different instrument. Equities, they could be equities, there could be debt or as well. Liquid funds are there. So let's talk about share only, equity. So if I have two options, One, I can buy the share of Reliance, open my demat account, I can buy the Reliance Industries. I have ICICI Bank, it means most of the shares in my individual account and then trade. Another option is I don't have the demat account. I don't have that much money to invest so that I can buy 5 shares or 10 shares of Reliance. Means if it is 2,800, 10 shares will cost me 28,000 rupees. I don't have 28,000 rupees to invest in Reliance Industry. What is the other option? Mutual fund. That is a pool of fund. N number of investors contribute together and buy. So there is a portfolio manager, fund manager. Fund manager is collecting the corpus that is called as AUM, asset under management. They usually in mutual fund scheme, there is a huge corpus. For example, that mutual fund scheme has collected 5,000 crore. So there will be a fund manager. Dedicated fund manager will invest in different securities, shares. They will buy Reliance, they will buy different securities based on the scheme objective. It's not, if it is a debt fund, they will not buy equities. So based on the scheme objective, they will buy shares, equity shares as per scheme related objective. Then what is going to happen based on my contribution? Let's say I invested 500 rupees. Based on my contribution, and the NAV is, let's say, 10 rupees. So I'll be getting 50 units. In those 50 units, that is consolidated portfolio of in different security, which is the mutual fund portfolio. Fine. I think, Kuntal, you have understood about what is mutual fund. Equity is nothing but shares. Like Reliance shares is what it comes under equity asset class. ICICI Bank, HDFC Bank, these all shares which are listed in the stock exchange, that is what? That is asset class which comes under equity, right? Wait, now the next point which HP wanted to buyer and seller from the institution. So let's say the mutual fund. Mutual fund schemes are investing where? They are investing in different securities. So what are they? They are investors. Pension funds. What is pension funds? A huge amount is collected in the pension. They are not investing the entire amount in the government securities. They might invest in different other instruments as well. So if the pension funds are investing in certain securities, who are they? They are institutional investors. You might have heard about a huge inflow in the share market from LIC. So that means once there was requirement, market has dipped down. So a huge amount was invested from LIC. Remember that scenario? So this is what that inflow is from these institutional investors, right? Okay. Any other question? Just give me a minute. Let me just check with technical team. Yes, Prachi, actually, the name which you have written in your set your on your laptop is showing HP because it's your laptop brand. I think you just rename yourself, so I will be able to mm, get your name right. This is, I think, because of you have not named your properly. Just give me 1 minute. I think someone from the team is connecting with me. Yes, I hope this is clear. Any other question related to whatever we have discussed? Previous slide. Yes, one of you were talking about the previous. Wait a minute. Which point is not clear? This one? Yes, please write your question. Arjun, you were, asked about the previous slide. Any simple term? This one you wanted me to explain? Okay. So in simple terms is who are entities involved? What means party? If there is any transaction, let's say you want to buy any product. So who are the entities or the parties involved in that transaction? Buyer and seller. In simple terms, these are the parties. One party is buyer, one party is seller. So in case of this finance, what are the different parties involved? It could be retail investors, means whosoever is investing less money. HNI means a category who are investing higher than the retail investors, which we call elite investor, high net worth individual, ultra net worth, uh, high net worth individual. Fine. Now talking about corporations, corporates also invest. It's not like they are only raising money, they are also investing. So what are the different companies or the corporate who are investing? It could be public limited, it could be private limited. So second part is clear. Now third is institutions. What are the institutions? Mutual funds, pension funds, private equity funds, venture capital. So these are institutions. These are also investing. So these are also one of the party to invest so that they can gain appropriate return out of it. They can get their money appreciated. Okay, clear now? Krishna, you have written DII, individual investors, and mutual fund. So mutual fund is different. Mutual fund is institutional, comes under the entity of institutional investors. If any mutual fund company is investing the fund, that will be different category. Okay. Okay, fine. So I hope this point is clear to everyone. Anybody would like to ask anything which we discussed today? I'm not discussing further slide. See, venture capital, Kuntal, is some the companies which we call as the startup company, venture capitalists, companies which have high potential to grow in futures, and these are the startup investors. Venture capitalist, you can see the term VC, venture capital. They are investing in different projects. These will term as venture capital. So they could have a great idea to invest. They might be initially they have the less capital, but they might be having good in terms of certain ideas or the research and development technique. They have a better chances to grow up. So the companies or the institutional investors, they might invest in those venture capital ideas, and they also raise money from the different ways, just like any corporates are raising money. Okay, VCs venture capital. Corporate finance, can you please part with taxes less because of debt? Yes, in case of debt, what I have discussed, Ronak, I talked about like the debt comes with tax shield. Fine. So that provide a tax shield to the companies. If we talk about the weighted average cost of capital, any company which has both the components, equity and debt. So that means debt will come with tax shield, cost of debt will be lower, cost of equity will be higher, and cost of debt will be lower as compared to equity. Then it will give the tax shield also. So debt is all considered as cheaper than equity. Another thing, I will quote one example for you to understand better. For example, there are two companies. One is debt free and one is having debt. So the company which is debt free will be having higher weighted average cost of capital. Company which has debt will be having lower cost. Reason being, debt is having a tax shield and the cost of debt is also low. Right? This is what I have explained. Okay, so tomorrow what we are going to discuss? We are going to discuss different transactions, right? What are the different transactions which are involved in finance? Then moving forward, we will discuss about time value of money concept, three important decisions. I'm not starting with transactions because again, that will be overloaded of the concept. For some of them, it will be you all will be very new to finance. So this much is clear to everyone. Just raise a hand. Any doubt in the entire session? If there is any doubt, let me know. Kartikeya, what is there any doubt? No. For Tanisha, till for now, what is the assignment? Just go through the session thoroughly. For everyone, just go through the session thoroughly. No doubt. Okay. Just share your feedback. If you want to add something, if you want that there should be certain more changes or we can add something else, you can write in chat box. Okay, in one session, we'll discuss certain questions. Questions means MCQ based on whatever we have discussed. So tomorrow, a brief about all the topics we have discussed today. So because there was some discrepancy and some of you joined late, some of you were not able to join the link since it was first session. So I don't mind repeating it in a crux and then we will proceed further. Kartikeya, no need to prepare further, but just whatever we have discussed. You will be having this recording of the session available. You can. Yes, Kuntal, you can ask. Everyone is free to ask the questions, but that should be relevant to the topic only. And once I gather at least few questions, after finishing one page of slide, I continuously check the question and respond immediately, right? If it is little bit off the topic, I take it later. But yes, I try to respond to each and every question which is mentioned on the chat box. Right. Jefferson, full PDF will not be shared tomorrow. Reason being, we have 2 more sessions to cover. Once we cover the entire module, then only PDF will be shared. During the session, you can ask any question, whichever we have covered. Yes, Kartikeya. During weekdays, only chat will be fine, Kuntal. Other things I think is not available. Weekend, during the session you can cover. Monday and Tuesday is week off for me. So if you raise any ticket on Monday and Tuesday, you might get a delayed response. But yes, if you raise on Wednesday, Thursday, within one day you will get the response of your ticket. Or if you are not getting any connection or if you are not able to raise ticket, you can write down your question and ask me in forthcoming session. Next session, you can ask the same. I hope it is clear now. Yes, you can ask. Like once we finish the complete this basics of finance session, the third session will have certain question and answer. During that time also you can ask. What I do usually after completion of one module, I take a session and ask 15 to 20 minutes or half an hour based on your questions, based on your doubt. We discuss all those doubt. We clear the doubt. Right? That Kartikeya, you discuss with your counselor and team, they will tell you exactly in detail. Arjun, you will get recorded session by tomorrow, maybe tomorrow. Fine, everyone. That's all for today. Thank you, everyone. Thank you. I'm ending the session. Tomorrow, we'll meet tomorrow at 4 p.m. Thank you. Thank you.